Welcome to the Gold Newsletter Podcast, your bank of knowledge of investment, economics, and geopolitics. Go to goldnewsletter.com for our publications and archives.
This is the Gold Newsletter Podcast. Fergus Hodgson, your host. Thank you for tuning in. I'm excited to have our very own co-host as the guest today. His name is Brien Lundin, and if you don't know him, shame on you. Where have you been? He's been a role model to me for many years. He is the editor of Gold Newsletter, which is goldnewsletter.com, and the director or the CEO of the New Orleans Investment Conference. And we have so much to catch up on. I just said let's just chat directly. So Brien, thank you for your leadership with me over the years, and I'm excited to chat with you today, mate.
Well, it's a pleasure to talk with you, Fergus, and especially if we're talking about gold, silver, and all these other subjects so near and dear to my heart.
Yeah, and just for people who are maybe new to the show and don't know the background, back in 2010, I was a reporter who went to the New Orleans conference and got to cover it. I just thought, I like these people. Top quality people. So that's one thing that Brien always says about the event, that it has this camaraderie or community, which I'm excited will be back this year. So 2021 in the physical form, or in the physical form of the event. Now, there's a lot going on, volatility, of course, everything's moving very quickly. You've always said in your publications that you favor investing rather than trading. Why is that? Do you want to clarify where you draw the line?
Yeah, well, trading's hard. That may be one reason why I don't do it. I'm just so busy. But if you're going to be a successful trader, you really need to work at it. You need to pay attention, and really to the exclusion of much else in your life, because there are so many smart traders out there you're betting against, so many algorithmic traders, high frequency traders. And to a large extent, it's somewhat of a rigged game if you can play along with the riggers. So you have to really work at it and be on top of it. And if I'm publishing a newsletter, analyzing the markets, talking to junior mining companies, running a company, doing the marketing, et cetera, I really can't pay that level of attention to the everyday trading. And therefore, I certainly can't give other people my views on trading. And frankly, I think I've found my niche doing what I do. And that's watching the metals markets now for some 35 years on a daily basis, having an understanding that goes with that level of experience, and knowing just about everybody in the junior mining sector, and having really a wealth of experience there to draw upon, in analyzing companies, kind of sniffing out new opportunities for my readers and trying to get those readers into these stories early on before they make really big moves. So it's something I've been doing a long time, and it is not trading. And, I feel like everybody should do what they do best. And I certainly would not be doing what I do best if I was trying to give advice on trading these markets.
There are people, of course, and avoiding this discussion is difficult. There are people who follow the gold price just with such detail and do try technical analysis. Do you want to mention some people who you believe are worthwhile, and if people want to have a crack at that or want to try following the prices more closely?
Well, there's a lot of trading forums out there that people who do trade can do that, but technical analysis isn't by itself associated with trading, and really just depends on how you look, what kind of technical analysis you're doing, whether you're taking a bigger picture, a longer term picture, or whether you're looking at minute by minute ticks on the screen. There are a lot of people who I follow in technical analysis. I think people who've read Gold Newsletter for some time know that we fairly almost exclusively use charts from Ron Grease at the chartstore.com. Ron publishes a weekly chart blog that covers all of the markets, all of the financial indices, economics, et cetera. and throws out charts that in some commentary on things that are very interesting and put things in a very clear historical perspective and context. And his service, I'm not sure what it is, it's around a couple $100 a year, but his weekly chart blog for anyone who is an active investor is absolutely invaluable. Pay for itself within a week, entire year.
That's right. We can get tripped up in terms of language there. I should say that when I think of trading, to be precise, we would say all the options and derivatives that people are using to play on the volatility and technical analysis, strictly speaking, is following charts and looking for patterns. But of course, those two things, there's a lot of crossover there. Now, let's say people, so I tend to agree with you strongly that investing is the way to go for people who are not full-time specialists and don't have let's say the computer skills or whatever, or a team on it. Otherwise, you'll be the sucker in the room. So now, assuming we go for investing, a lot of people obviously just don't know how to get started. And they'll say, should I go with ETFs? Should I go with royalty companies? Should I go with actual picking different mining stocks? And then what you have said, just at least to begin with, go with getting some physical precious metals in your hands.
Yeah, absolutely. People go into, it's like the deer in the headlights. It's so confusing that they end up overthinking it and not doing anything. And it's not simple, but there are some ways you can simplify it, because there's a lot of different ways to invest in precious metals, from physical metals through options, as you mentioned, in futures, through mining shares and indices, et cetera. And within each of those subsectors, there's another spectrum of opportunities and things you need to research and understand. So I try to simplify it. We do have a free special report on goldnewsletter.com, our website, that's called The Investor's Guide to Gold and Silver. It's comprehensive. It's objective. I tell people, all of the best newsletter writers, even all of my competitors who I think are really high quality, all of the best conferences to attend, even my competitors, when I think they offer good value. And it explains every step in every subsector of precious metals investing. But I do tell people right off the bat that the primary reason to own gold and silver is not as an investment or a way to get rich, but a way to preserve your wealth. It's fundamentally insurance, because given the size of the debts in the world today, and the sovereign debt in the US, the federal debt, the dollar has to be depreciated to a very significant extent. This is the recipe that's been used in every instance like this in every civilization throughout human history, because it's happened over and over again over millennia. And every time the underlying currency has to be depreciated because the debts have grown too large, and you have to lessen the value of those debts. So it's going to happen here. And the only way to opt out of that system, and the only way to fundamentally protect yourself, is to invest in the monetary metals, gold and silver. There are other ways to do it. There are tangible assets in general that will appreciate relative to the depreciation in the dollar, for instance, real estate, collectibles, fine art, et cetera, et cetera. But each of those is something that you have to, again, know, understand, research, and learn, educate yourself about. But just owning physical gold and silver, while there are a number of ways to do that, and you do have to look into it a bit, it's very easy to do, and it is an essential first step in my view.
And yeah, you've mentioned that you do prefer getting in your hands rather than having this third party holding on your behalf, even though, of course, having the third party hold it is much more liquid. Do you want to clarify why you still hold on to that preference?
Yeah, it's not necessary. If it's physical metals, it's not necessarily more liquid, because you're going to have to get it delivered to you, and then you're going to have to sell it. Although some holders will sell it. I don't feel comfortable recommending third-party storage programs, because there's always an element of risk in that I don't want to, frankly, expose my reputation to, because I may know very well and trust the owner of a storage facility, but I don't know his staff. Despite all the security and everything else, there can be failures in the like. So I tell people, if you are accumulating enough gold and silver that you have to use an offsite or an independent storage facility, spread your risk. Don't put all of your eggs in one basket. Spread it through a few facilities. Importantly, if you can, an offshore facility out of the U.S. But I also recommend that you have some of your physical precious metals holdings accessible to you. That does not mean in a bank safe deposit box, because one of the things that you're insuring against is literally a bank holiday. So you don't want to have it in that kind of a facility. There are a lot of ways you can store things in your house in a safe. You can hide it away. You can buy reports online on how to hide precious metals and valuables within your home. But rest assured that every burglar has already downloaded those reports and seen all of that. But figure it out yourself. I don't want to know, but you should have some precious metals available to you. And I like silver because it is divisible. I think that if you're going to have gold, you need to have a bit of both. You need to be diversified among those, but primarily gold and some silver.
Okay. And once people have that first foundation of at least some physical precious metals, depending on their taste and how much insurance they think they need. Yeah, as you said, there are these different approaches to going about it. And the ETF option, so the GDXJ and the GDX, these give diversified exposure to mining companies for those who don't want to take the effort or time to actually research different companies. Now, is that just a guaranteed losing strategy, just investing in a whole bunch of random mining companies?
No, not really, because on average, these mining companies, these big producers, in a long-term gold and silver bull market that's based on monetary fundamentals, concerns over the value of the currency, which is the kind of bull market I think we're in. From start to finish, the average mining company during that stretch goes up about 4 times over. Historically, they've done that. And I think we could do better here, 4 to 5 times or whatever. So you can do very well if you kind of generally time it very well as far as getting out. And that's fine because you're betting on the sector as a whole. However, if you do the research, because the mining sector from the big majors, the producers, on down, and especially with the junior exploration companies and development companies that we specialize in Gold Newsletter, it's a very inefficient market. So if you're willing to do the legwork and do the research and spend some money for newsletters, spend some money and time at conferences, and it's fun, it's enjoyable, and it's not just drudgery. And you'll enjoy it. But if you're willing to do that, then you can find these undiscovered gems early on in their life cycle and do much better. We've had companies routinely go up 4 or 5 times in short order. We've had a lot of companies, more than I can count, go up 10 or 20 times in value. We recently had one peak at 55 times our entry level in our Gold Newsletter alert. So they're out there, and if this is a long-standing gold and silver bull market like we had from 2000 to 2011, then you have time to take these multi-bagger gains in one stock, roll those gains over into another one that might multiply in price. Maybe somewhere along the way you hit one that goes up 10 or 20 times, and you can quickly build really life-changing wealth through that process. It's not the kind of thing anybody wants to put the majority of their investment portfolio in, but for money that you can afford to speculate with, where you can afford to have individual plays lose a lot of value in hopes of getting that one that goes up 10 or 20 times, then you can really do a lot of good for your personal portfolio, for your wealth, by spending the time to invest in the sector. And if it's a bear market in the metals, it's a miserable place to be. It's really hard to make to get these winners. It's really hard to run a newsletter called Gold Newsletter and successfully sell it. Although we've had some big gainers in down markets because of the exploration stories having success here and there. But in a market where you have a bull market in place, where metals prices are consistently trending higher, then it flips. It gets hard to lose in the sector if you know how to buy these companies early and buy them well and manage your profits and manage the portfolios. But when the rising tide is lifting all boats, then it becomes a very fun and rewarding sector to be in. And like I say, it can create and has created life-changing wealth for thousands, really millions of people who get into the sector when it's in this kind of a run like it is now. Hi, I'm Brien Lundin, and I'm here with our CEO interview for our podcast sponsor, Inventa Capital Corp. I have the pleasure of welcoming to this first CEO interview in our series, Charles Funk, who is the president and CEO of Heliostar Metals. Is it metals or minerals?
It is metals, Brian.
It is metals. Okay, good. It's a fairly new venture. It's actually new to Gold Newsletter's recommended list. Its symbol is HSTR on the Venture Exchange. And Heliostar has a project that I've looked at for a number of years when it was operated by a previous company that you've kind of absorbed into Heliostar. And my issue with the project before was that it was very interesting, but it was comprised of a few targets, a deposit strung over a couple of islands, and it was hard to piece it all together with the limited exploration budgets that were being employed at the time. However, looking at it and talking with you, Charles, about it now with the fairly extensive and organized exploration plan, well-financed plan for the project, and seeing what you already have in that a resource of some nearly 400,000 ounces at nearly 14 grams per ton average grade is quite considerable, a great way to start, great place to start. But you believe that this project has at least 1 million ounce potential to it. And I'd like to see if you can kind of explain where you get that goal from, that sizable goal, and how it relates to the current resource and grades and the recent drill results that you've just gotten.
Yeah, thank you. We think the project has a lot of potential. The 384,000 ounces at 13.8 grams is an amazing start, but we think it's just the start. And it's because, as you hinted, that this is a very large district with porphyry targets, bulk tonnage gold targets, vein targets that hasn't had the economies of scale brought to it in terms of systematic continuous drill programs, really strong technical understanding of how to make discoveries in these epithermal belts. And so to start with a vein that's at surface, that's 2 to 10 meters wide, that is 13.8 grams per ton in the United States is a pretty great advantage to begin with. And so we think the simplest way to describe why we think there could be 1 million ounces as a first step in this district is that resource is wide open. The deepest hole is 5.5 meters at 24 grams. And then we have a whole series of targets that include an old mine that's never been drilled under, a stalled discovery at Aquila, and a non-compliant resource. It makes some pretty attractive targets that we think is why we can make 1 million ounces our first step on the journey of showing what Unga can be.
Yeah, and your first results really confirmed things. If I remember correctly, the first hole, maybe the second hole extended or was higher than the previous drilling, so you kind of extended it to surface. But you're getting an understanding of the structure and the really remarkably high-grade structure. What are you discovering right now in terms of the extent, the potential strike length of that structure, down dip extent, et cetera, from, I guess, really early results so far?
Yeah, so we released our first results and we stepped out 50 metres and drilled over 11 metres at 7.7 grams, including 4 metres at over half an ounce. So they're the kind of grades you love to see in any target anywhere, let alone high impact shallow drilling. And the reason that we're able to make those kind of step outs is there's a core area that's very well drilled in this shoot at the SH1 target. But there was a 100-metre gap between surface and the first pierce points. And so we completed a whole series of holes there late last year. And these are the first results. There'll be more to come if you have a look at our presentations and our news release. And we're not sure whether the ore shoot dips steeply or dips a little more shallowly in that section. And so we've also completed 2 deep drill holes, which we're waiting for assays from. We do need to do a significant amount more drilling next year. And so the shallow opportunity, there's a lot of core space drilling that sort of needs to be tightened up, that we think potentially can add ounces. And then the fact that it's open at depth. So we've got 3 ways that we think we can increase the resource at SH1.
Well, it's important to realize too that at those grades, even 50-meter step outs can add a lot of ounces very quickly. And what we're talking about is an underground project that will be, with those grades beginning at surface, should be fairly easy and inexpensive to exploit and really help the economics. So I can see that resource of nearly 400,000 ounces getting fairly sizable quickly. And again, it's one of a number of targets that you have, and even different mineralizing styles of in the whole project.
Yeah, it really is a spectacular project. It's sort of been a project that's been out of sight and out of mind. And our aim is to bring it front and center to people's attention, because we think the combination of those targets, I think our combination at SH1, Aquila, Apollo, and Centennial, the first four of a whole suite of targets, will be some of the highest probability high-grade targets that get drilled in one project this year.
Well, Charles, thank you so much for bringing us up to date. I should mention that you were one of the driving forces behind the great success at Beasler Resources so far, and your team as well. And this is, I think, the next venture in that team's path and the next success, I believe. So if people want to get into a company that has all the markings of another big success in the junior mining sector, they need to really look at Heliostar very quickly and soon. Thank you so much. Looking forward to the next drill results.
Thank you, Brien, and thank you to the listeners.
Yeah, I read a well-prepared article published by the CFA Institute on their blog, Enterprising Investor. And they had a couple of, I think they're Swiss guys, discussing the pricing projections. And their argument was basically that in 2021, they did some regression analysis with a whole bunch of different ingredients, including obviously monetary expansion and the like. And they said that basically the band is about $2,000 to $3,000 by the end of the year. And right now we're sitting closer to 1,800, of course. So they're very optimistic. Do you share that optimism for this year?
Yes, I would think, conservatively, we should get around 2,200 or so this year, given the forces in place. And at this point, we're literally in uncharted territory, because nominally, at least, not inflation adjusted, but nominally, the gold price has never been this high. I mean, recently we were over 2,000, set a new nominal price record, and we were in uncharted territory. So what we have to do now, the only thing we can do now at this point, is look back in history and see how gold and silver have performed in past bull markets. And generally speaking, there have been bursts where the metals have gone up, either on a shorter time frame, like from September 1976 to January 1980, or longer term from 2000 to 2011. The gold price has gone up 7 or 8 times during these time spans. And if you look at it from that standpoint, from the lows in this cycle of around $1,000, we're looking at $7,000 or $8,000 gold if it performs similarly over some, yet unknown time span. So we could, at the end of all this, at the end of this bull market, and that could be 3 years down the road, it could be 11 years down the road, but we could be looking at $7,000 or $8,000 gold at that point.
Okay, and there's also, you said you'd like to include silver in the mix, and apparently silver has gotten caught up in this GameStopper mayhem or euphoria. So why is silver getting a lot of play right now, and why are you particularly optimistic about silver in general?
Well, the whole GameStop phenomenon is one of cornering the short sellers. And GameStop had a big short position against it for valid reasons. And the Reddit investors, the Reddit users kind of ganged up and picked a few stocks that had high short positions and decided to overwhelm the shorts, kind of stick it to the man, to the hedge funds that have historically left the retail, the small investors, as holding the bag. And I have to sympathize with that and really applaud the motivations and root for them, except they don't realize, they don't have the experience to know that these things all end up the same way. A rocket shot up and then, the bottom falls out. Who knows what's going to happen tomorrow as we speak? The bottom's falling out of these plays, and a number of the trading platforms have turned them into liquidate only. You can't buy them anymore and you can only sell. So again, that just reinforces the whole view they have that the man is sticking it to them and changing the rules of the game. But some of the primary forces behind that are now looking at silver as the next target to short, because there is a massive short position. And that's got a lot of the gold and silver bugs out there really excited. And I've been telling people to be careful what they ask for, because what we don't want is that kind of stop phenomenon in the metals. It may seem great, but number one, you're not going to sell at the top. And number two, it'll be a rocket shot up, and then it'll be, an elevator, not an elevator down, it'll be jumping off the ledge down.
A bungee jump down, yeah.
Yeah, and we have enough fundamentals driving the metals right now to fuel a bull market for years to come. And if we have a consistent, relatively slower rise over a number of years, we're going to have the opportunity to make fortunes in these mining stocks as we go from one success to another. But if it just shoots up and right back down, it's going to destroy confidence in the sector. It's going to wipe out a lot of people. And we won't make nearly as much from this bull market as we could have. But we're seeing it right now. We've seen some of the shorts start to cover, or some people come into silver as we speak. Silver is up over $1, and gold is struggling to have
keep up.
To keep up. It's struggling to even get into the green today. It was up a good bit. It got sold off, and as we speak, it's about unchanged. But yeah, this phenomenon is kind of leaking into silver. If it's a situation where it just convinces or persuades the shorts to cover their bets and stop playing their games in the silver market, which is a highly manipulated market by big players who know how to move it here and there. If it convinces them to kind of get out of the way before they get burned, then that will be a good thing. But if we get a flood of new and experienced buyers into the sector that drive the price up and it comes right back down, it won't be good for anyone, I don't believe.
Right. And okay, so I fear in those instances too. Yeah, as you said, there will be few winners. It's like the famous book, Where Are the Customers' Yachts? That the people, actually, the trading platforms are the ones who are really winning from all this hub of, so much activity. So while we, in our last few minutes, would you like to discuss what is going on with the New Orleans Investment Conference, to give us a bit of discussion as to what's going on behind the scenes? Because of course you had a successful online event this year, but we'd all love to get back. And what are the updates?
Well, the virtual event this year went off fantastically well. We had great technical success, bandwidth held up for everyone. And we were able to bring in a lot of speakers that we would not ordinarily have been able to bring in. So it was a fantastic success, especially content-wise. But we couldn't recreate, obviously, that ambiance, that atmosphere, the intellectual energy you get from just walking the halls at the New Orleans conference. So we're really looking forward to that. We've had so much feedback from attendees, speakers, and exhibiting companies that they can't wait to get back to New Orleans. And you know, in combination with the relative success so far of the vaccines, I'm going full bore, pedal to the metal with an in-person event this October 17th through 20th here in New Orleans. And I think it's going to be a big welcoming back party for the entire mining sector, for the entire precious metal sector, for the entire retail investment sector. We're going to have a great lineup again. We're going to have some sort of a hybrid event, which will now enable us to bring in attendees from around the world who can't come to New Orleans, also speakers from around the world. But we will have a live in-person event with all the splendor and hospitality and great food and intellectual energy again, you know, in presentations that you just can't get anywhere else. The thing that we can't create virtually is that experience of bumping into a speaker that you may have been following for years but never met, never hoped to meet. And they take the time to talk to you about your questions, your concerns, meeting other attendees who just by their very presence at that event are kind of self-identifying as a really smart, eager, curious investor who has knowledge that they can share, valuable knowledge that they can share with you and that you can share with them. So that kind of camaraderie has been impossible really to replicate in a virtual world. And we're really looking forward to being back in person here in New Orleans. And I think it's going to be, from all signs now, a completely safe experience for everyone.
Right. And that note about the maybe disruptive element of the online form actually having some positive spillover, right? Bring in more people, both speakers and guests. I'm not quite sure what is going on in terms of supplemental events. Were you going to have some kind of monthly or alternative events in addition to the main event? What's going on in that regard?
That's a great observation, because one of the things we've done is kind of transform the New Orleans conference from an event business model to a membership business model. So you can pay to get access to the virtual New Orleans conference, but also an ongoing stream of mini events, interviews, private Zoom calls, and the like throughout the year that only our attendees will have access to. So it's an exclusive club, and it runs a bit counter to the whole internet theme, you know, where everything's free and everything's available. But we're finding that there's tremendous value to be had, that speakers and other investors can speak more freely when they know that the content that what they're saying is not going to be out on YouTube and floating around the internet forever, that it's only going to an exclusive group of very sophisticated elite investors. So it's working out fantastically well so far. We're getting a lot of people who are joining who can never make it to the New Orleans conference, so it's very difficult to. We're getting attendees from Australia, Singapore, Thailand, I mean, all around the world. And they're telling us this is fantastic. We didn't know this existed and never would have known it existed because it's just physically too difficult for them to make that trip.
Brien, you've been working in this field for, spanning 4 decades or about 35 years.
Yeah.
What keeps you passionate about it after all this time?
I guess it's tomorrow's discovery, you know, and what's going to happen tomorrow. We don't know, but we're constantly probing and feeling ahead to try and find out what happens. And And there's an inevitability about gold and silver. And if you're a student of history, especially monetary history, you realize again that what's going on now has happened over and over and over again throughout human history. It's nothing new. And it's going to happen according to the same pattern as before. So if you have a confidence in that, then the rest of it is just trying to navigate the wiggles in the line, the wiggles in the uptrend, and not get shaken out of the market. And along the way, it's really prospecting. It's from the mining share standpoint, there's a thrill in trying to find the next big thing and striking that mother lode before anybody else finds it and sharing that with our readers. And over the years, it's that part that's really, I found as gratifying as anything is the feedback I get from our longtime readers and subscribers and conference attendees, because over the years you see them at the conference over and over again, and you go to become friends. And also in this day and age, the feedback we can get is not an occasional letter in the mail, but it's immediate. And you can correspond to people, you can exchange ideas through various forums. And there, it is a democratization of the investment industry, and understanding what's going on and sharing your thoughts with like-minded individuals who also see what's going on. That's really exhilarating and fun and exciting.
Yeah, one thing to say too is that obviously you said there has been a democratization of information, but I just love the way that the organization, the New Orleans Conference and Gold Newsletter, are basically moving with it, right? So you're just adapting to the time, and so long as you have that unique information, that community, there's still value there. It's just moving, just the medium is changing to some degree. So, yeah.
Yeah, it has. And sometimes we've been forced kicking and screaming to change, like with the pandemic forcing us to go this year. But we've realized, you find the benefits and you try to do it better than other people and learn from them. And I think we've been able to do that.
Like you said, even just looking back, maybe a decade, when did you switch from mailing out newsletters to PDFs via email?
Probably about 15 years ago, maybe 12 years ago.
Yeah, so I mean, it's not as though there was one stuck model. Even the newsletter business only really got rolling in the 80s, as far as I know. So it's been evolving all the time. Now, we will put up a link to the guide to precious. What was the initial guide you mentioned?
The Investor's Guide to Gold and Silver.
Great.
It's actually on the Gold Newsletter website, goldnewsletter.com. I don't know what the link directly to the order form is, but there's a banner on goldnewsletter.com and you can
sure
click on.
Yeah, and so Brien, he's also active on Twitter. There's a lot of banter back and forth, which I enjoy. So follow him there. Otherwise, thanks for listening, folks, and make sure you're subscribed. So cheers.